right, thank you all. So, well, let me do a temperature check. HBCUniverse, show some love. Yeah. There we go. Thank you all for your engagement. I'm turning it over to Sherifah.
Thanks, Tremaine. How are y'all doing? Good. Awesome. Well, welcome to the Money Talks panel. My name is Sherifah Munis, and I am the founder and the executive director of the Newwave Foundation. The Newwave Foundation is a nonprofit organization that provides access to educational opportunities like scholarships for deserving students who are the first in their families to go to college, students like my mom and dad. And through this organization, we get to keep my parents' legacy going and also create new legacies for the next generation. We also put together programming such as this panel where we focus on financial literacy and entrepreneurship because we do know that money matters, and to truly have a voice and to truly have a seat at the table, this is the type of conversation that we need to be having, and not just having, but implementing. I'm also a proud graduate of Morgan State University. So it is so good to be back home, and we have an amazing powerhouse panel today, so you guys are really in for a treat. But I did want to let you guys know that Money Talks started during the height of the pandemic 5 years ago, and we started off as a webinar. And for the first time, we had the in-person panel last year, right here at Morgan, and this is our second year in person. And we always have it during Black History Month because we know that as we celebrate ourselves, as we celebrate our resilience, as we celebrate our brilliance, we really need to make sure that we talk about bridging the wealth gap, right? And so that's why we're having this conversation. But before we get started, I am going to be introducing you first to Jeffery Kennerly, who's a financial advisor and vice president at Morgan Stanley. Can you say a few words, please?
Good afternoon, everyone. As you have mentioned, my name is Jeffery Kennerly, Vice President at Morgan Stanley. Started a practice there, a national practice there, that focuses really on supporting really three verticals. One, professionals, two, institutions, and then three, business owners. And the one thing that goes across all of us, and I'm very intentional around being in our community. So these are executives who are Black and brown executives who are first generation, being able to extend to those levels of equity compensation and things of that nature. From an organizational perspective, any organizations that's doing work in our community, whether it be prison reform, education reform, those types of works, and then from business owners' perspective, being able to support our business owners, helping them understand the difference between a lifestyle business and an actual investable, exitable enterprise that you can actually capitalize on. So happy to be here. It's something that's really near and dear to me, and I'm looking forward to this conversation today.
Thank you, Jeffery. And next we have fellow Morgan alum, Tiffany Mcghee.
That's like the most important line in my bio, right?
She is the CEO and Chief Investment Officer of Pivotal Advisors, and she's also a frequent CNBC contributor. Thank you so much. I don't know what's going on.
Really happy to be here. My name is Tiffany Mcghee. I'm the founder, CEO, and CIO, Chief Investment Officer of Pivotal Advisors. We are, this is a mouthful, so just bear with me, a outsourced Chief Investment Officer firm based in New York City. And what that means is we only work with institutions, not individuals. Minimum institutions about 20 million and above. Average is about 200 million. And we really, our tagline is maximizing alpha and generating alpha, maximizing impact. So what we do is work with foundations and endowments and some pensions and really help them to understand that they can invest and also create impact. This couldn't have been a better commercial, so I actually see one of our clients, Congressional Black Caucus Foundation, and they give them a shout out, but these are the kind of institutions that we work with, so happy to be here.
And then last but not least, we have Julius Maina, and he is a capital access strategist with the Minority Business Development Agency.
Hey, Boogie. Anybody from Bowie State? So I'm Julius, Valentine, Maina. She mentioned I work for the Minority Business Development Agency. It's a department under the U.S. Department of Commerce. Disclaimer, I am not here as a representative of the government today, although opinions are my own. Interesting time in government. In my other life, I've been a professor at Morgan State University. And the only other highlight, I'm a startup junkie. I have a company that recently got acquired in January that focused on civic engagement among GNC voters. And I'm just excited to be here.
All right, so you guys can hear me okay now? Perfect, all right. So as you guys can see, we have a stellar panel today. So again, we're here to talk about the future of money. But as we talk about that, I just wanted to run a few numbers with you guys. So the average Black household in America has about 12 cents in wealth for every dollar. And that's not a typo, 12 cents. Okay? Black entrepreneurs receive less than 2% of venture capital funding, despite the fact that we actually start businesses at the highest rate in the country. And then we have to now talk about AI and technology and the policies that are going on right now. How does that affect us in terms of building wealth, keeping wealth, and passing wealth on to the next generation? Well, that's what we're going to be getting into. So first question's up, and I'm going to be pointing this one at each of. So, how do you see the rise of digital currencies and blockchain technology reshaping personal finance and investment strategies for your clients, particularly within the African American community?
Thank you for that question. Look, I think we're all in this space, in this area, this generation of this tremendous technological expansion. And that goes down to what we're seeing with blockchain, what we're seeing with the cryptocurrencies, what we're seeing with AI. And I think it's going to be really accretive to our community in the sense of it allows for the democratization in new ways of the ability to invest. And so to the extent that you all are able to, and my families that I support, are able to better understand with clarity, especially with the blockchain, having more clarity around transactions, that'll only hopefully engage them in a way that they are more aligned to what their money is doing. For far too often, conversations around money in our community has been taboo. Our grandparents didn't really talk about it, mom and dad didn't really talk about it, which has led to this dearth and gap. And I think what we're seeing now in terms of the younger generation is that a heightened interest in understanding and continuing to drive that. But what that means to me as an advisor is I am one, educating and being much more forwardcoming in terms of not only supporting the younger generation in terms of them having the confidence to be able to have the conversations, but encouraging the parents to hear it and encourage those conversations at the dinner table. And then there's also the need of me really being thoughtful around how I'm planning and advising. AI and some of the technological advances are going to really make the investing piece more streamlined. So it's the advice that I'm able to give that actually looks at the bigger picture. Advising and advising families are going to be much more focused on true advice as opposed to the trading piece for families, because there's just nuances there. And I'm going to have to, with my team, and integrate that type of technology as well as broader advice to the family. So I think that's going to be one of the transformative things that we're going to see in a financial advising perspective for those students who are interested in going down that path. Really get good at, develop your skills in terms of giving advice. giving advice. I'd say that those are some of the key things that I'm going to see.
Thank you. It's going to be a similar question for you, Tiffany, but however, just given what you do, we know that one of the biggest barriers, like you just mentioned, to minority entrepreneurs is access to funding. Now, given the age that we're in, with all the technology, like we talked about, the AI, the blockchain, and all of that going on, what are some actionable steps that individuals can take, budding entrepreneurs can take, or even current and existing entrepreneurs to help, kind of bridge some of those gaps?
For me?
Yeah.
Like
This is whether through venture funding, institutional investors.
Okay, so in terms of like access to capital, so I think on a very basic level, if you are an entrepreneur, understanding what type of money you should be going after is really important, right? So you mentioned like bank loans, government programs and venture. Those are three very different things. I can speak from the venture perspective because that's, we work across all asset classes. Essentially what we do is build investment portfolios for institutions and we manage those portfolios. So we're dealing with a lot of private investments, a lot of alternative investments, private equity venture, as well as public equities and fixed income as well. But when I'm sitting, so you can kind of see what the ecosystem is. We invest in, we will hire a venture manager, but that venture manager now has to come before me and sell me, in essence, right? And we're conducting deep due diligence. Those same venture managers an entrepreneur would come to get an investment. But what we're doing is we're conducting deep due diligence. And when you really have to consider, from a venture perspective, venture is the riskiest asset class. So these guys might look at 100, 200 deals a year and might do 5 to 10, right? So it's very, very hard. And I think there's so much excitement around venture. You see Jay-Z has a venture fund, Marcy Ventures, I know them very well. Nas has one, everybody has one, Serena has one. It's like, this is not easy. None of this is easy. You have a better chance of getting a bank loan with really bad credit than you have of getting an allocation. I mean, you're laughing at me, but I'm just saying, than getting an allocation from a venture fund. And so with that, so really understanding where your business is, right? And understanding what the funding cycles are, angel, venture, private equity, what is mezzanine financing, Series A, Series B, Series C. If you walk in to a venture meeting and don't know those, it's not only is it embarrassing, but they're gonna be polite and say, we'll get back to you and never get back to you. If you, and then understanding there are different types of venture funds. Some only deal with tech, some only deal with specific industries. So just knowing that you have someone in front of you that is in venture is not enough. So doing your research, really understanding, and then getting every single, if you do believe that you are a good candidate for venture investment, really making sure everything is tight. Because I think so many times entrepreneurs focus on the story and they want to get to your heart, and that is great, and we love the grind. But they're going to open up your financials because no one is taking a chance on anybody unless every single T is crossed and I is dotted. And then what they have to do is important to understand that person that you're meeting with what their job is, because you're not going to meet with the head person, nobody does, right? Is if they believe it, if they believe in you and everything is tight, then they have to go sell it to their boss. And they're graded. They want to keep their job. So they are rising and falling with you. And with the understanding that of those 10 businesses that they fund, maybe half might make it. So I think understanding the landscape is very, very important. And then once you have that, understanding what you need for a bank loan. I don't give bank loans, so I'm not the best person to answer that. But also for government programs, I think, because there's so much money out there that we don't have to always go to like the shiny thing.
Thank you so much, Tiffany. I mean, so pretty much just have to, like you said, have your eyes dotted, your T's crossed, and really come correct, know your stuff. So my next question is for you, Julius, and again, it's in that same mode and theme, but really from a policy perspective, what programs are out there, for small businesses looking to get access to capital in the age that we're in right now?
Yeah. So once again, I'm not representing my agency today, but we put out a lot of money for capital readiness. Because what we found, it's not enough to say I want grant money from the government, which is usually non-dilutive. So non-dilutive means we'll give you money without taking credit. We talked about venture. Venture, they take a percentage of your company to help you grow. Federal funding doesn't do that. It says we're going to bet on you because you're good for the American economy, right? The challenge is a lot of us don't even know how to navigate this government application system. So what we did as an agency, we said, hey, let's give people money to help you apply for government. Because it wasn't enough to just put money out there. Access to capital wasn't just, there's no capital shortage, it's just we don't know how to access the capital. So that's number one. Number two, other agencies like the National Science Foundation have this thing called the SBIR, Small Business Innovation Research Grant. So you can go type NSF SBIR. For the longest time, it was really, really hard to get research grant funding to support you. So what they did, they streamlined it. They have something called a project pitch. Picture, if there is a need for what we're building in the government, aligned with what we're doing, we'll give you money. That's really what it is. Federal funding, you're not just building randomly and the numbers are good, but it's really, in what way does this impact the American economy? For instance, if you apply for SBIR, you're saying the broader impact of this thing that I'm building is X on this population. In venture, it's the total addressable market of what I'm building projected for 5 years. Two different languages of what we see a lot of times, although the federal government has a lot of amazing programs. Startup people give us a startup pitch because they don't understand the audience on the other side of the market. The number one thing is there's a lot of federal funding, but you have to know how to apply. There's probably 5 systems that you have to be part of. You have to know what industry, population, and impact is. And then you have to know the agency you're applying to and the difference between a pitch for every single pitch. So that's number one. On the policy, what I love about policy and the impact on everything we're talking about, I'll give you a quick example. How many people know GPS? Right? The technology for GPS came from a federal lab. Meaning this was federal-owned technology. They said, hey, if we put it out into the market, this could be really good for commercialization. It was put in the market in 2008, 2009, Uber was launched. Right? So a lot of people pay attention to policy, not just because I'm going to build something, but they know I can only build it if that thing has already been passed. So the impact of policy is huge. So we talked about cryptocurrency. The startup that we built, it was eventually acquired, it was just a timing thing, right? We looked at this heavy appetite for blockchain technology, right? Heavy appetite for regulation and transparency. So what we pitched wasn't understand our technologies. We know the market is going to transparency, right? We watched what happened with TikTok, App Store. We built a progressive web app. We didn't need an app store to get to our app. So the thing that was really sexy about what we built, it's a political play. You don't need to download an app. You don't need to go to anybody. And the data is owned by the people. That was our pitch. I don't have to tell you what I built, but I can tell you that just based on the policy landscape, everybody got really excited once they watched what was happening in place. So the impact of policy on building, it's the other thing that we have to know. You have to know what's happening in the market, what could be passed in the market, and then how you position yourself to build something that you can address those.
Wow, thanks so much. So as you guys heard, pay attention to whatever policies are happening right now because that could definitely help you whatever you're trying to do. My next question goes back to you, Jeff, and we are talking about the future of money. You work with individuals, organizations every day in terms of how you help them position their money. So what does that mean to you, as a financial advisor, and how does that impact you for your money?
Yeah, it continues to be a conversation around when you start thinking, future looking with the families that support. There's this idea of like a mind shift change, and really supporting them in terms of understanding that for those who are maybe first generation and they're call it, I don't know what generation it actually be. When you have someone who is, you have maybe we'll call it same generation, you have grandparents or you have parents who are aging, with young children below you, and you're trying to figure out how to navigate. They're trying to build wealth so that people who never meet them will have something for them. A lot of, to be able to do that, you have to make sure you're educating your youth. And so a part of the education process is this mindset shift from what I call a scarcity mindset to more of an abundance mindset. And the difference in that and the nuances in those are this. Scarcity is this idea of, maybe you've heard, maybe someone in the room knew their grandparents, their grandmother had money stuffed under the mattress. Or someone passed away and the house wasn't taken care of enough and the house was lost because no one took care of the taxes, but it was a paid for house. That's because they weren't doing the things needed to be able to maintain that asset. That's the abundance mindset. That's the mindset of how do I make sure my assets are working in a way that will go on further beyond my lifestyle, my lifespan. And so when I think about the future of money and the future of how we continue to generationally pass it on in our families, it will have to take a foundational shift in terms of how we think about our relationship with money. One of the things that I see really quickly, I'll give an example, is this idea of, you work very hard, you're business owners, you generate, great salaries, and you stash money in your bank account. And you let it sit in your bank account. And it's the security of being able to open up your app and say, I have it there, but it's not working for you. It's not doing anything for you other than just sitting there. And what happens is, as you get older, if that money is not working in some capacity, at least earning some sort of yield, you will continue to have to work because inflation is inevitable. And so this idea of allowing capital to work for you so that you don't have to extend your own labor hours to earn in your later years is an important mindset shift that is, I think, key for our community in terms of being thoughtful about assets, thoughtful about how we allow that to be used. Because if you don't do that, you will just continue to be, for lack of a better term, a slave to money. Because you always have to make enough money to be able to live. And so thoughtfulness around that, it's a mindset shift, is something that's really key to the conversation we're having with our families, especially the younger ones. The generation we're working directly with tend to have it. It's about making sure everyone understands it below and above.
So true, so true. I know that we're coming up for time. We want to get one of the audience questions in. But Tiffany, before that, really quickly, I know you work with a lot of, institutional investors, pension funds, endowments, and things like that. I guess my question to you is, how can they be leveraged to create more equitable access to funding and economic opportunities for minority young people?
Yeah, I think that's a really great question. It's something I don't get to talk about on CNBC, so that's great. So we've always felt that our firm, and probably a lot of people, that the next generation civil rights is the money. And so we talk about the future of money. And so when we think about what the largest concentration, where the largest concentration of Black wealth is in the country, I'm not going to ask for a show of hands because of time, but I'll tell you that it's not in real estate, even though we probably think it's there. It's not even in entrepreneurship. What it is in pensions. And I'm not talking about your 401k, that's the defined contribution plan. I'm talking about pensions, which most people in this room probably don't have. That's a defined benefit plan where, maybe like your parents, certainly like your grandparents, aunties had them, where you work for a certain period of time, you paid into a pension. When you retired, you got a check for the rest of your natural life, right? So out of the $73 trillion in assets under management in this country, in pensions, less than 1% is managed by people of color, all people of color, women, LGBTQ, veterans, everybody in that diversity box, less than 1%. And so that's really the intersection of the work that we do. And so when we think about all that money that our aunties and uncles and grandparents have been paying into, it gets turned around to be invested by people who don't look like us. And so as a firm, when we are working with pensions or we are working with foundations and endowments, we have this opportunity for impact. And so now more than ever, what we're seeing is that foundation endowments institutions are really aware of the power that lies within their investment portfolios, not only to generate return, but also to create impact. And so there are Black managers. Who in here knows Robert Smith? So you probably know him because he gave the commencement address at Morehouse and he paid off the entire class of student loan debt. But I know him, he's a mentor of mine, but I knew him way before that because he is the founder of Vista, which is one of the most successful private equity firms in the country. So we invest in Vista. We invest in companies like Clear Lake, founded by Jose Feliciano, one of the most, another venture fund, private equity and venture fund, super successful, Latino owned. And so when we make those investments, we are shifting the wealth. And so we have this framework internally, and there are organizations that want to do that, want to create that impact, especially along the racial wealth gap. And does it shift power? Does it create access? And so Robert and Jose have tons of money, right? They're billionaires. But we're also looking for emerging managers. So managers who have had their fund less than 10 years. Managers who have under $1 billion in assets. And I know I throw that number out, $1 billion, like it's a lot. And in our world, it really isn't a lot. I just said $73 trillion in assets under management. So there are a lot of barriers to entry if you are standing up a fund to do business with a pension. But one of the things that we can do is really start to have those conversations with employers about where is the money going and who is managing the money.
Thank you so much. Did you guys know that the pension funds had the majority of the money? That would be right. All right, so our last question, Julius, is going to you, and this is really more of a call to action question, which is one actionable step. You mentioned before some of the things that entrepreneurs can look into, like research funds and things of that sort. What is one actionable step that an entrepreneur or just someone who is looking to get into learning about entrepreneurship can do right now as a takeaway from coming on this panel that you would say they should do? And then I'll just ask the other two of you to also just one thing, just a quick little sentence of one action step that people can take away from this.
Yeah. If you're building anything, you have to define whether it's a business or a startup. Understanding the growth trajectory which you're building and how to position yourself with the right person on the other side is probably the most important. Because you can have a really good, stable business, and that's okay. You do not have to have a startup, but you can have a really solid business. So for both, you need a mentor, an advisor, and a client. In terms of just other basic practical things, sacrifices, discipline sacrifices, regardless of what you're doing, you have to understand how long you're going to sacrifice to save, to then come out and really show it the right way. Because I think a lot of times we get too hungry and we forget to sacrifice and discipline.
Thank you so much. Tiffany?
So since I'm a chief investment officer, this is my plug for investing. And I would just say read. Most of my job is reading. I was up at 7 o'clock this morning reading. I probably read about 50-ish pieces a week because I set the tone for, I set the investment strategy for the firm. And so if you are interested in investing, I'm going to assume that you are, because you're here, you have to really be a student of the markets. And so I think it's also great to work with financial advisors But you can also, when you're well read, have an intelligent conversation, not to rely on someone else to do it for you. You can make more thoughtful decisions. And also, if you are concerned or think that what's going on in the country right now is a little bit of chaos and trying to figure out what's going on, the market is a good thermometer of real-time sentiment. And so you can just look at what happened the other day with tariffs and what that happened to the market with sentiment. There are sentiment reports that come out, so we're looking at those things. The jobs report came out, it was all right. But then sentiment came out, it's like, you might be in a little bit of trouble. So that's a good way, even if you don't invest, which I think everybody should, to really understand how the country, how the world is viewing us.
Thank you. And just maybe one word, because we're up for time.
I'm really going to piggyback off what she said. Took it here, just invest. For the students, time is your biggest asset. Start now. If it's $50 a month, $50 a week, starting now is really important. And for those who are a little bit older, normalize the conversations around wealth with your parents. Stop making it shouldn't be taboo. Have these conversations at the dinner table so that you can start to lift us out of, get out of our own ways and not worry about someone's savings.
Thank you all. Thank you all so much. This is great. Before we go, for those of you who are looking to start to network, move with the movers and shakers in the DMV area, we have a special raffle going on today where the winner will be winning 2 courtside seats to this weekend's Wizards game, which includes dinner and parking. So you can go to the Newwave Foundation table, make sure you get your ticket in there, and we will get I guess we'll be announcing the winners. You guys will be notified by Monday. All right. Well, thank you guys so much, Chef, Tiffany, and Julius. This was a great, amazing conversation, very timely. Don't you guys think so? Yeah.
One more round of applause for our panel. Absolutely. It's our panel. Yes. Yes. All right. Before everybody goes, couple of announcements. Our next